Hey, economic warriors and finance fanatics, it's your boy, the boss of Boss Economics World, here to break down the hottest, juiciest, and downright messiest economic drama of 2025. Buckle up, because today we're diving headfirst into the cage match of the century, Donald Trump versus the Federal Reserve. Spoiler alert, it's not just a fight over interest rates, it's a full-on assault on the sacred temple of global finance. And guess what? The markets are acting like they're binge-watching Netflix while Rome burns. Let's unpack this chaos, from the surface-level shenanigans to the deep, dark economic underbelly, and figure out what it means for your wallet, your portfolio, and the future of the almighty dollar. Grab your popcorn, folks, this is gonna be wild. Alright, let's start with the headline that's got everyone buzzing. Donald Trump, the self-proclaimed stable genius of economic policy, is trying to fire Fed Governor Lisa Cook. Why? Well, he's trotting out some unproven allegations of mortgage fraud, claims she's already slapping down in court faster than you can say fake news. But let's be real, this isn't about Cook's mortgage. This is Trump playing 4D chess with the most powerful financial institution on the planet, trying to bend the Fed to his will like it's a contestant on The Apprentice. You're fired. Except this time, it's not a reality TV star, it's a central banker. Trump's endgame? Total control over monetary policy. He's already said he'd do a better job setting interest rates than the Fed, and now he's stacking the deck. With Fed Chair Jerome Powell's term ending in May 2026, Trump's got his eye on a loyalist replacement. He's already tapped Stephen Miran, his White House economic advisor, to fill a short-term vacancy, and he's talking about Fed board seats like their campaign rally seats, openly bragging about securing a majority to swing housing markets and juice the economy. We'll have a majority very shortly, he crowed at a cabinet meeting. Housing is going to swing, and it's going to be great. Great for whom, Don? Because economists are screaming that this could be a disaster movie in the making. Now, let's zoom out from the Trump tantrum and talk about why this is more than just political theater. The Federal Reserve's independence isn't just some nerdy economic footnote, it's the bedrock of global financial stability. For decades, the data has been crystal clear: when central banks are free from political meddling, inflation stays lower, growth is steadier, and markets trust the system. A 2023 study by the International Monetary Fund, IMF, found that countries with independent central banks had inflation rates averaging 2.5% lower than those with politically influenced ones over a 20-year period. Why? Because politicians like Trump have elections to win, and nothing screams vote for me like slashing interest rates to juice the economy, even if it means inflation goes haywire. Flashback to the 1970s, when President Nixon leaned on Fed Chair Arthur Burns to keep rates low ahead of the 1972 election. The result? Inflation spiraled out of control, hitting double digits by the end of the decade. The Fed had to jack up rates to a brutal 20% under Paul Volcker, triggering a recession that crushed jobs and businesses. Lesson learned, right? Apparently not, because Trump's playbook looks eerily similar. And with US inflation already proving sticky, hovering at 3.2% in July 2025, well above the Fed's 2% target, political pressure to cut rates could light the fuse on another inflationary bomb. Here's where things get really spicy. Despite Trump's Fed assault, financial markets are acting like they're on a yoga retreat. No panic sell-offs, no bond market meltdowns, nada. The dollar is actually stronger than it was last week, and the $29 trillion treasury market is holding steady. Even US stocks are climbing, with the S&P 500 up 4% since the drama kicked off. What gives? Are markets just ignoring the elephant in the room, or is there something deeper at play? Some experts, like former New York Fed President William Dudley, are scratching their heads. I'm sort of surprised that the markets are so relaxed about this, Dudley told Bloomberg TV. Others, like Brian Nick at New Age Wealth, argue that the bar for something bad to spook markets is sky high. An erosion of Fed independence over time is being priced in, but equity markets are not bothered, Nick said. Translation: Wall Street's betting that either Trump will back off if markets tank, or that the courts will save the day by keeping Cook in her seat. But here's the kicker: markets might be underestimating the long-term damage. If Trump succeeds in turning the Fed into his personal piggy bank, the dollar's status as the world's reserve currency could take a hit. Already, global trust in U.S. financial leadership is shaky. Look at the 2024 BRICS summit, where China and Russia pushed for de-dollarization, with trade in non-dollar currencies up 30% year-over-year, per the Bank for International Settlements. A politically compromised Fed could accelerate that trend, driving up U.S. borrowing costs as foreign investors demand higher yields to hold treasuries. Berenberg's Atakan Bakiskin warns, the U.S. will eventually pay for this with a weaker dollar and higher long-term borrowing costs. And with U.S. debt already ballooning to $35 trillion in 2025, that's a bill we can't afford. Now, let's take a field trip to the emerging markets, where political meddling in central banks is basically a national sport. Spoiler alert, it never ends well. Take Turkey, where President Erdogan has sacked multiple central bank governors since 2019 for refusing to slash rates. The result? Inflation hit a jaw-dropping 85% in 2022, and the lira lost over 60% of its value in 3 years, per World Bank data. Or look at Brazil, where former central bank governor Henrique Meirelles faced political pressure to cut rates in the early 2000s. He held firm and inflation stabilized, but not without a fight. Fast forward to 2024, and Brazil's President Lula was at it again, railing against rate hikes and calling the central bank chief a political adversary. What's the common thread? Politicians love low rates because they boost growth and popularity in the short term, but the long-term cost is always higher inflation, weaker currencies, and eroded trust. Sound familiar? Trump's obsession with hundreds of billions in interest savings from Fed rate cuts is straight out of the emerging market playbook. And with U.S. fiscal deficits projected to hit $2 trillion annually by 2026, per the Congressional Budget Office, the temptation to keep borrowing costs low is only going to grow. But wait, there's more. Trump's Fed fight isn't happening in a vacuum, it's part of a broader strategy to reshape U.S. institutions in his image. Remember his first term, when he stacked the judiciary with loyalists, cementing a conservative supermajority on the Supreme Court? That same court might decide Lisa Cook's fate, and early signals suggest it could defer to the Fed's independence, but don't bet on it. Trump's also eyeing the regional Fed banks, which play a key role in setting rates, as potential targets for political control. If he pulls this off, the Fed could go from a technocratic guardian of stability to a partisan pawn in the GOP machine. And let's not forget the hypocrisy angle, because boss economics world loves a good roast. Trump's not the only one who's criticized the federal progressives have bashed it for stoking inequality with asset purchases, while conservatives have accused it of overreach on climate change. Even the 2023 Silicon Valley Bank collapse was pinned on Fed oversight failures. But here's the difference, those critiques were about accountability, not control. Trump's not trying to fix the Fed, he's trying to own it. So, where does this leave us? We're at a crossroads, folks. If Trump's Fed takeover succeeds, we could see a future of higher inflation, a weaker dollar, and a U.S. economy that's less trusted on the global stage. If the courts or markets push back, we might dodge the bullet, but the damage to the Fed's credibility could linger for years. Either way, the stakes are sky high, and the world is watching. For you, the everyday investor, this means bracing for volatility. Diversify your portfolio, hedge against inflation, and keep an eye on the dollar's moves. For finance pros, it's time to stress test your models for a world where the Fed's independence is no longer a given. And for everyone else? Stay woke, because this isn't just about Trump versus the Fed, it's about the future of money itself. Alright, economic warriors, that's a wrap on today's episode of Boss Economics World. What do you think, will Trump turn the Fed into his personal ATM, or will the system fight back? Drop your hot takes in the comments, smash the like button if you're ready to take on the economic chaos, and subscribe for more no-holds-barred breakdowns of the financial circus. Until next time, keep hustling, keep learning, and remember, in the world of economics, the only boss is you.